What's happening, crypto fam? Happy Thursday. Good morning and welcome back to Love for Crypto. I'm Scott and it's a pleasure to have you here. I appreciate you taking the time out to consume the content, so thank you. Another warm one, another scorcher in Manchester. Bit of a wobble this morning, guys, not gonna lie. Got a bit stressed. Being out of work and not being able to get hold of the job centre and that. To just try and make sure there's some money coming in to pay the things I need to pay, do you know what I mean? But we had a shower, we got through to the job centre finally, and we're feeling much more positive now. So we're going to have a little look at the future and a little chat about invisible payments. The W3C themselves, on some of the documents and information and documentation, have said in the future payments will be invisible. There'll be that little friction and that little cost, you won't even notice them. When you couple that with machine-to-machine payments and machines actually making payments for us, once they're given permission, they've always got permission kind of thing. It's going to be weird how they do it. I don't know exactly how they're going to do it. I'm going to read through an article blog, if you will, by Matt Jackson, Head of Partner Development at PPRO. So I'm not stealing his content, I'm just sharing it. Little credit to him. That sun's beaming, so I might have to move about a little bit during this. I'm red hot already. So invisible payments, these are Matt's words at first, and then go right through this and give some opinions and that on how we think it might play out. But invisible payments have already had a massive impact on the physical and online retail experience and could have the potential to eradicate cash and payment cards from the payment journey. Amazon Go even went as far as removing point-of-sale systems from its payment process to provide customers with what they consider to be an enhanced in-store experience. Consumers have demanded frictionless checkout experiences, whether they are getting a sandwich at the neighbourhood cafe or buying trousers they saw on Instagram. Consumers expect to complete purchases almost with a wave of magic wand. Online stores are making strides to make checkout experiences as frictionless as possible, which makes sense considering that the UK e-commerce sites suffer from cart abandonment rates of 76%. That's interesting. Implementing one-click checkouts using PayPal and other alternative payment methods such as Apple Pay. Interesting that some e-commerce sites suffer a cart abandonment rates of 76%. Now, cart abandonment, I've got stuff in my cart that I might not end up buying, so they're putting that in it. That's not necessarily because of the payment system, but interesting perspective and something to think on. While the impact of invisible payments is expected to be significant, predictions are they will account for 78 billion in annual transactions by 2022. There are some indications that the road there is going to be bumpy for the UK. Not all consumers have been enthusiastic about invisible payments. In addition to consumer demand for invisible payments, the diversity of products, prices and consumer payment preferences, both locally and internationally, make it quite complicated on the back end. Well, I've got something you can whack right on the back end, love, and it's called ILP. An ILP API, Interledger Protocol, will merge all them networks of value and make frictionless instant settlement, should I say. Another little bit, either he's not in the loop with ILP or he's leaving it out for some reason. For invisible payments to gain mass consumer adoption, there are several cultural and logistic barriers that retail and payment industry must consider first. Consumers want to authenticate big ticket purchases. And I was talking about this with Boo the other night, and we're going on about contactless now. Contactless cards are great for small purchases, aren't they? But you don't really want someone to be able to spend £100 on it, because it's £100. You know what I mean? That's a big transaction. So how's that going to work? With your phone, it's quite easy. You're verifying it. Boo says that herself. But when it comes to the likes of the chip or a machine-to-machine payment that's through the back end, that's not exactly through your phone, how exactly are they going to do that? Matt wrote, implementing invisible payments for high-value transactions will be a significant barrier. There are many successful use cases for low-value invisible transactions. Uber was adopted so widely and rapidly thanks in large part to the user's payment experience. All these ride-sharing companies mostly handle relatively low-value transactions, with consumers welcoming the convenience of frictionless payment process. But what happens when a transaction's over £100? Buying something over £100 or more without authentication is an uncomfortable thought for many consumers. It is. It can be argued that customers expect, indeed want, a level of friction when making certain purchases. Businesses with big ticket items will still need to provide consumers with an option to use more traditional payment journeys for the foreseeable future. So there's talk about little fingerprint scanning chips going in cards soon, and I think some banks are planning on trialing it very soon. Don't hold me to it, but I believe in that West being one of them. I've got to try and shuffle out the way the sun, that's just me. But yeah, that West possibly being one of them, so keep your eyes on either the cards just disappearing or the biometrics coming in. Cash disappearing is a really, really interesting prospect. His next point, cash dependent and underbanked shoppers. Now, there's a lot of people that when you're going on a night out and you know you want to spend £200 on that night out, you just take £200 out, you have £200 in your wallet and you take it out and you're done. Now, that's not as easy when you've only got one bank account on your phone, but through crypto and DLT, we know we can separate wallets and separate value ourselves. So you can move £200 to a certain Wirex account, and with the Wirex card or your phone, Revolut, Zum, you can pay, and when it stops paying, you know you've spent your £200. It's going to be a little bit embarrassing at the last transaction, but again, you could just go on your phone and say how much is still in the account, and you know that like when there's £50 left, you spent £150 throughout that day. So, despite a seemingly ubiquitous shift to digital payment methods, cash is not disappearing anytime soon. Consumers in many booming e-commerce markets still have a strong preference for or reliance upon cash-based payment methods. Mexico, Brazil, Japan are a few examples. In the UK, some demographics prefer to use and rely on cash, particularly the elderly, great point, and underbanked. It is estimated that despite the introduction of new technology and different payment methods, cash will still account for nearly 10% of UK transactions in 2028. That brings me to a point, I was at a cash machine last night and there's an old guy there, clearly had some sort of condition, disability, call it what you will, but he was limited in his mobility, should we say. He couldn't move that fast, and he's got his money, he's taking his money out the register, out the ATM, putting it in his wallet, and he's getting the receipt, and it actually made me worry if there was people about that didn't really have a heart, should we say, and was willing to depart him of his cash in a nasty manner, then it wouldn't be too hard. Now, I truly believe that DLT and blockchain can provide people like that with security, with just a little bit of education and push in the right direction. The people who currently use cash and are scared to make the full jump to digital will soon realise that it is safer in the long run, as long as it's controlled in the correct manner. We know the current banking system is run corruptly and it needs to stop. And this technology looks like it has the tools needed for us to make them changes. Regulatory requirements. Recent regulations have correlated with consumers becoming increasingly aware of the need to protect their data and monitor for fraud. Strong customer authentication, SCA, enforced under the Second Payment Service Directive, the PSD2. All terms you can Google, by the way, if you want finger, put PDF after them for some real information and not articles. The PSD2 states that the customer must verify their identity before payment information can be exchanged between a financial institution and a third-party provider, a TPP. But in place to prevent fraudulent transactions, it simply means that SCA requires consumers to authenticate payments by entering a PIN or using biometric data like a thumbprint. While transaction value will likely influence the level of authentication required under SCA, the need for authentication is an inherent barrier to a frictionless or invisible payment. It remains to be seen how invisible payments and SCA will coexist. Well, clearly, the contactless doesn't really get verified. Anyone could hold my card at that moment and anyone can pay for anything up to £30. So clearly at the moment we've got up to £30 transactions that don't require authentication, and anything beyond £30 for most banks will require a chip and pin or biometrics. Biometrics come into the card, or the card is going through the phone apps. A proliferation of locally preferred payment methods. Interesting. It's all about global. Getting it global and getting it interoperable. So as commerce goes global, payment preferences using cards, e-wallets, cash, etc. are becoming more and more local. That can be a surprise for people in the UK and US. PPRO's recent research highlights that 91% of UK customers use debit and credit card payments, but there are over 450 significant local payment methods across the globe, accounting for over 75% of global e-commerce transactions. In the UK, PayPal is the most widely used method for invisible payments. If you was wondering what all that meant, then it means act like PayPal. However, the Dutch opt for Ideal as their payment method of choice, which is less suited to invisible payments. In Latin American markets, cash-based payment methods like Bolito, Bicario in Brazil, and OXXO in Mexico take up a significant share of e-commerce. Interesting. So when you come to the back end of your Amazon in all your different places, it's got pay by bank card or pay by PayPal, but in different countries and jurisdictions, it's not going to say PayPal for them. It's going to say pay by Boleto Bancario or pay by OXXO. Interesting. Those are certain, and they're certainly not invisible either, as the customer has to visit a brick and mortar store to pay. If customers are forced to use a payment method they don't trust, over 65% are likely to go to another retailer who accepts their preferred payment method. For UK-based retailers who want to do business across borders, it's important to recognise that the key to increasing conversion is accepting your customer's preferred payment method. Unsuccessful implementation of invisible payments, where locally preferred payment methods are overlooked, could lead to the loss of loyal customers. It's interesting. No mention of ILP though. He's clearly he's either been told to shy away from ILP and the true internet of value being built on other protocols, because they're there. He could then move on to another point of what's actually being constructed to join all these networks and provide solutions to all the problems he's seeing. He's seen problems and hurdles in the way that can clearly be tackled and removed by Interledger Protocol and other interoperable protocols. What does the future hold for invisible payments? There is no doubt invisible payments will continue to revolutionise the customer experience for casual or everyday purchases. However, it's his opinion that we won't see invisible payment journeys across the board for quite a while. Consumer trust, cash-dependent shoppers, regulatory requirements, and the explosion of local payment methods are significant hurdles that have to be jumped in order for that to happen. Is Revolut the same as PayPal? Is it masking an invisible payment? Is it seeming like an invisible payment where you could have pounds on your Revolut account and you're abroad somewhere in Europe and you're paying in euros, they're receiving euros, but you sent pounds? Now that's a revolution already, one that he doesn't seem to be coming about. But again, if we look into the fundamental workings of Revolut, is it similar to PayPal? Is it really masking the problem that exists and not really sorting it? Is Zoom and its trust lines in a position to really start tackling these hurdles and provide some solution? It's their goal at PPRO to help payment service providers and retailers create the best customer experience possible, gain brand loyalty and increase conversion in every market. Invisible payments surely have their part to play in that. So here's what I recommend for getting on the road to success. Get to know your customer, learn how they like to pay for each purchase they make, offer the right payment methods, don't force adoption of invisible payments, but incentivize it through exclusive discounts or bonus loyalty points. Interesting, good, that's good, I like that. This all boils down to providing a customer with options, because untimely we live in a society that expects choice. Where do we get loads of healthy choice? In a level playing field and a stable internet of value. Retailers that provide customers with their preferred way to pay, visible or invisible, will be the ones who prosper in today's competitive marketplace. Might actually get in touch with that guy to see if he knows, see what he knows about ILP and that, because he seems like he's trying to help people get into it, but doesn't quite know that there's back-end protocols already providing a couple of solutions for him and his clients. Do you know what I mean? We're sat in the shed in my back garden, man, and there's guys like that don't even know what's going on. Price move, yeah. Just wish we had more dough to put in. But yeah, it's coming. And the more you read stuff like that, where you see people who are working in financial markets, in the financial space, and they're looking for interoperable solutions or interoperability solutions, global instant frictionless payments. I mean, he's talking about what the W3C talk about in all the documents. Surely his company's part of that. Do you know what I mean? It's they've got hundreds of companies within the consortium that's going all out on letting enterprise know that there's interoperable protocols in the background. So why, when it drips down to the mainstreams, everyone leaving out IOV, ILP, interoperability, network of ledgers, the web of ledgers, the internet of value? Why no one really talking about it? My guess is they don't really want the masses seeing the bigger picture. I see clear as day, me. Or at least my version of it. And I'm super excited. Like I say, I can't wait till I'm 40, me. Might be wishing the next 4 years away, but can't wait till I'm 40. 36 in a couple of months. Whoop whoop. Level 36, mate. That's when shit in the game starts opening up. Start getting near level 50, mate. Life is a game, guys. Treat it like one. Level yourself up every day. Make sure you're comfortable with the character you have chosen. Seriously. Get comfortable. I heard something interesting the other day. If you have a song as your alarm clock, yeah, that's the intro theme song of every episode of your life. Make sure it's a positive song that picks you up and makes you attack the day with positivity. Unlike I attacked the day this morning, waking up a little bit stressed. Must have had the wrong song on. I love you guys. I appreciate you watching. I hope you enjoy the rest of your week. This weather is lovely for April. I don't know where it's come from. May it last. It's absolutely lovely. We're topping the tans up. Wishing health and happiness to you and yours. Sound off in the comments. Let us know what you think about the future of Internet of Value. Frictionless payments, invisible payments. How high should a payment get before it needs authentication? Should it be £3, £5, £10, £20, £30, £50? How are we going to authenticate through different apps? Is it like Vin says, once you give the app permission through Zoom, it's got permission, it's being authenticated. It never sees the keys, it just gets access. It's interesting. So let us know what you think in the comments. You know the script. We love crypto, we love XRP, and we love you. I'll see you on the next one, guys. Peace.